saying back in January before the pandemic, to say that 4 of those 5 years will probably be an improving year for housing in terms of the overall dollar revenue. So prices will certainly be rising because we were facing housing shortage. The demand, minimal increases, but you combine that with the price increases, you have dollar volume increase. So 4 of the next 5 years prepare for an increase. I always give 1 year as a caveat because some unexpected event happens, maybe oil prices spike or Federal Reserve suddenly raise interest rates or whatnot. So I just always give 1 year as a caveat, but overall long-term outlook was great. But I never knew that 1 year downturn would be so sudden and it would be due to this coronavirus. Kind of strange that say a small poor peasant out in China has taste for a certain strange exotic animal, and from that is leading to this global economic recession that we are undergoing. Now, we can call it a recession given the size of the decline that is anticipated in the second quarter, whether it is GDP, unemployment, any economic data, retail sales, vehicle sales, and naturally home sales. But this decline is it is government imposed. So the economy has been quite sound, housing market, very healthy condition, even as of February, but it is a stoppage from the government directive, especially hard in the Pennsylvania because Governor of Pennsylvania went even harsher to say one cannot even do social distancing and visit homes. In Virginia, where I am, just right across the river from Potomac, DC is where NAR office is. In Virginia, the governor does permit the social distancing to visit homes. So when I look at the data very carefully as of say last week of March, early week of April, I am finding that Virginia sales activity is down, but only marginally, not drastically so, maybe 30 or 40%. But in Pennsylvania, it looks to be down about 80% or even 90%, just because people cannot make that physical visit. But the question is, it is down because many people are just abiding, they want to be patriotic, compliant with the stay in shelter orders. If it's not needed, then don't go out. So people are just abiding by that. Home sellers are aware that there are fewer buyer interests at the moment, so there's delisting of property. Remember, we had a housing shortage, so there's even fewer inventory in today's market, but we also have fewer buyers in today's market. Realtors naturally are becoming very creative, doing the virtual tours. Hopefully the electronic signature notary is all in place. In very rare instances, maybe less than 10%, there are some home buyers who are willing to do everything virtual, particularly given the fact that, especially for starter homes, there was a multiple bid and people are getting priced out. So maybe they are sensing with less buyer competition, even if it's 100% virtual, they want to get the deals done. So some deals are still happening. March numbers, as the numbers are coming in, official number will come out next week from my office to the talking to the media. But some of the local association, the numbers that are coming in, March appears to be holding on very well. Even in Seattle, remember, Seattle was the first epicenter for coronavirus. The governor, for a couple of days, put no visiting any homes. Then the governor said, as long as you respect social distancing, you can visit homes. So in Seattle market, it looks like on the starter home, there's still multiple bid going on. So even though they faced the original epicenter of the being very cautious, the buyers are quickly moving in if the inventory is there. So the outlook, in essence, is to say that what happens once the economy reopens, once the governor said, okay, respect social distancing, but one can do a normal business activity with social distancing, where the buyers reappear. On the economic front, we know about the horrible news on the unemployment insurance. good that you have Drew coming on later today to talk about the unemployment insurance availability for realtors, because that's something that we have worked very hard to say that Americans were working hard before the pandemic. They should not be penalized just because government said the economy needs to shut down. So tap into all the resources available, small business loan availability, because it is not the fault of the workers of America, entrepreneurs, to suffer through this crisis, particularly given that it is the government's guidance. Of course, we respect that guidance because we want to ensure that people remain healthy. But once the economy opens up, I believe that buyers will come back. First, about 70% of Americans have secure jobs, working in the government, education, healthcare sector. So many people have secure jobs. Interest rates incredibly low, 3%. I think there's even room to go down even further, or even 2.9%. I know JP Morgan came out recently this week to say they are going to impose much higher credit standards, 20% down payment, 700 on the credit score. But this could be just a little game they are playing to tell the government officials to say, help out on the mortgage servicing business. We know about the mortgage forbearance. You face financial hardship, miss few months of payments until economy reopens again. But during that time, JP Morgan and other mortgage servicers are not getting those revenue. If they're not getting those revenue, but they still have to pay property taxes, homeowner insurance, and mortgage investors, all that money, they're getting on the squeeze. And hence they are saying we cannot have more money available for mortgages. We're gonna greatly tighten the standards. So it's an easy fix solution. Federal Reserve essentially have to say, we're gonna provide short-term loans to companies like JP Morgan and other mortgage servicers so that JP Morgan can make those payments for property taxes and others. And once the economy reopens and homeowners are able to pay mortgage payment, then JP Morgan just simply pays back the Federal Reserve. So it's a very short-term fix, but we are lobbying, we are putting that, talking to the Treasury to assure that this sudden high mortgage standard just goes away quickly. In the meantime, if JP Morgan is doing this, I'm sure there are other mortgage brokers who wants to take away some of the businesses. So I think that we have to monitor what the Quicken Loans and others do in the process, because FHA, Fannie and Freddie backed mortgages, 3% down payment should be adequate. Let me go back to the economy. I'm getting diverging here and there part. So we saw the huge increase in unemployment insurance claims, 16 million in quick 3 weeks time span. I mean, this is an economy hitting a wall. But again, it is a government directive hitting a wall. And that's why the unemployment insurance of $600 from the federal government, plus whatever the state offers. So you are looking at essentially, say, a typical person who are unemployed in the country, where their lost income on average will almost be made up by the unemployment insurance on average. Some people would be worse off, other people would be better off. So a few weeks ago, there was a lot of panic among people who are getting laid off, what's gonna happen. But now I think people are calming down a bit because the amount that is being provided appears to replace most of lost income, particularly for people in the, say, lower middle income range of the, people working at cashiers and whatnot. So hopefully that provides sufficient amount in terms of stimulus. Again, size of the stimulus is massive. So once the economy reopens, first we have that 70% of the population with stable employment. They are seeing low mortgage rates. And then you are seeing the 30% who recently got laid off and may begin to say, well, is my job secure? And you begin to wonder what type of business will be 100% back online, business as usual. Certainly hair salon, dental offices, daycare center, I think those will be back online 100% immediately. Cruise ship is gonna take years to get back to fully normal. So there are a lot of businesses in between, airline, how would people feel comfortable traveling on planes? So there will be some delays in total opening up the economy, but there's also a good portion of the economy that would be up and running right away because there's a demand there. And hence, with the stimulus package in place, again, to replace those lost business opportunity during this pandemic. And normally, even during normal recession, say it was not a pandemic, there's always some level of automatic stabilizer, meaning that people lose job, they get compensation and so forth, so that it's not a total downfall in the process. But tap into all the resources like small business loan availability, which can be essentially a grant. So you don't have to repay if you meet certain criteria. And also the unemployment benefits, realtors should tap into that because we lobby hard to assure that independent contractors can tap into it. I know that some states, in fact, many states, they never provided unemployment insurance for independent contractors, self-employed, and therefore their computer system is not set up. So they may say it's not available yet, but whenever it is available, it will be all retroactive. So you just document to say economy shut down on this date. I haven't been getting unemployment insurance for 4 weeks, so you should be able to get all that retroactive payment as well. Housing market, one certainty on the housing market is that we will see stable prices in my view. It is completely different from 2008, 2009 when home prices plunged 30%. So some of your home sellers or maybe your home buyers are concerned, are we going to face another housing market crash? Home prices will be stable. First, the logic suggests home prices will be stable. Back in 08, 09, we had subprime lending, people overstretching their budget, adjustable rate mortgages readjusting quickly. And then we had the home builders going wild. They overproduced way above historical normal. So you had a combination of bad mortgages with overproduction, foreclosure coming in, and therefore oversupply, prices collapse along with the job losses. Today, we have housing shortage. Home builders have been underproducing for the past 7-8 years. So it's not a 1 year underproduction, but accumulation of multiple years of underproduction, which is the reason why on the starter home mid-price, you often had multiple bid in your local market in many areas. Upper end is always soft, so upper end, I would not say it was a shortage, but the mid-price and below housing shortage. Today, we have home sellers delisting. Home builders may not be able to quickly build. So we are going to continue to face this housing shortage. And then you combine with the fact that do we have subprime mortgages? And the answer is no, we don't have that subprime, wide prevalence of subprime mortgages. So mortgages will not blow up. And also we have the mortgage forbearance. So even though people who cannot pay mortgages, at least they can postpone for 6 months and they can extend for another 6 months if they can demonstrate continuing hardship. So at least that will delay any foreclosures from happening. And also if the economy recovers by later in the second half of the year, then that becomes a moot issue. So don't anticipate any sudden oversupply situation. So home prices will be very stable. That's the economic logic. We took survey of realtor members, randomly selected across the country, 3,000 responses. So again, those are solid responses. You have home sellers. What are you doing? And what they're saying is some are delisting the properties. Others are saying they will list once the pandemic phase is over. So they're just waiting for the pandemic phase is over before listing. What about prices? And something like 70 or 80% of the home sellers are saying, I'm not going to reduce price. I'm going to do what I was planning on doing because they believe the demand is there. Other 10, 20%, they're saying price reduction will be only about less than 5%. So all these realtors are indicating there's no panic on the home seller side. What about the buyers? What are the buyers' expectations? Realtors who are working with buyers. Do you anticipate that you can get a big bargain, deep discounts? And the buyers, something like 60%, again, majority believe that they will be facing about the same price, or maybe through negotiation, they can get price reduction up to 5%. So very few minority are saying that they can get price reduction of more than 5% on the buyer side. Now, naturally, sellers are more stubborn on the prices compared to the buyers. So buyers generally think they can maybe get a little bargain, while the sellers are saying, no, we're not going to give you a bargain. But I think we will have that inventory shortage. but it's just question of the buyers. 70% of the people have stable employment. They will see low interest rates. Other remaining people are impacted employment in the short term. Some will come back online quickly. Others will take longer to come back online. But given that we had the housing shortage, and even if we don't get the full demand, returning of the full demand, I think we will still face a situation where we are not in any oversupply situation. So home prices should remain very steady. My forecast, which is highly uncertain because we don't know when the economy will open, whether vaccine will be found. It will depend upon the path of the virus. So we really don't know a lot of things. But assuming that second quarter, so again, April through June is essentially a shutdown, but then things begin to open up from July, is that second quarter numbers on anything economic will look absolutely horrible. Some people will say even worse than Great Depression, all that stuff. But the second half will be a rebound. But I think the rebound will not be sufficient enough to compensate for the loss we experienced in the second half. So that overall GDP, which is the total measure of the economy, could be down about 2 or 3% for the year as a whole in 2020. But 2021, I think that the GDP numbers should be positive, stimulus, Federal Reserve is all in terms of providing liquidity. For housing market, losing the spring buying season is a big deal. The reason why we have the spring buying season is that we have families who want to make that move before the school year begins. So if they cannot make the move in July and August, they may say, well, what the heck, I'm gonna stay in my home for another 12 months. So we may miss out on some families who wanted to time it before the school year begins because they don't want their children to suffer that disruption in the school year move. So we may miss some of the home sales, so we're not going to capture all of those spring buying season activity that we lose in autumn and in the winter. But I think the home sales, again, will come back. In the Pennsylvania, again, you are seeing about 80% reduction in buyer traffic, governor's orders and so forth. So home sales could be down total year, maybe around, say, anywhere from 5 to 10% home sales, unit sales. But the prices will probably be stable, if not an increase. I would not be surprised if there is actual increase. So you are looking at overall dollar revenue in the Philadelphia area to be down in the single digit period. And then 2021, all clear, hopefully vaccine is found. We are back to normal. And at that time, the home building will be needed. And that's where local association and others, I know Alan Dome is a city councilman, realtor, so he understands the value of real estate because we need to build more real estate because there will be continuing housing shortage once the economy reopens with vaccine part in 2021. So it's just trying to go over this little hump. I know it's difficulty. Interestingly, a survey of realtors, we found that 10% of the realtors are saying during this pandemic, they are seeing no change in their business activity, with I think 3% actually seeing more business activity now personally, they're saying, compared to pre-pandemic. We know that real estate business is always entrepreneurial, so some people, even in the most difficult circumstances, whether using technology, reaching out to their client, however it is, I was quite surprised that 10% are still doing same number of business activity or a little better. But 90% of realtors are saying far fewer business activity. Hard data shows fewer business activity in April, May, certainly, and Pennsylvania more so because of the governor's directives regarding you cannot visit homes. So let me just leave it there, and then I'm not sure what the time is. Actually, I think I used all of my time, but let me just turn it back to Matt. And if you think we should take a few questions, I'm open to that, or President Stephanie.
Well, thank you very much. That was very, very informative. I do have a question, and it goes back to the article from NAR last night with JP Morgan Chase and the bank requirements for mortgage. And I'm a little concerned about the first-time home buyers and how that might affect them. And how long do you think those requirements will stay in place?
Tomorrow, we are coming out with a news release to say that the down payment for first-time buyers are 7% on average. Many first-time buyers, FHA 3.5%, some people Fannie and Freddie back 3%. So if it's 20% down payment, you are essentially wiping away the first-time buyers, and that will be about 1/3 of the market, or even 40% of the market place. So we hope JP Morgan, which is one of the major mortgage servicers, so it's more of a mortgage servicing issue, that the Federal Reserve and the Treasury can make an easy fix, provide short-term to JP Morgan and similar organizations, and then they can begin to have sufficient liquidity to provide mortgages. I think the key is Quicken Loans, whether Quicken Loans follow that lead of JP Morgan, because Quicken Loans, they are not, after they make the mortgages, they sell their servicing right over to JP Morgan and Chase, and I think Chase is following JP Morgan's lead. So is that really the cash crunch that the mortgage servicers are running into because of the mortgage forbearance? So government is saying, okay, you don't have to pay your mortgages, and now JP Morgan does not have that mortgage money coming in, and hence they are saying they have to raise the standards. The other part, I think, is the refinance demand, huge surge, and JP Morgan actually said they don't have enough staffing to handle all the mortgage servicing. So they want to put a little gate, and putting the gate is essentially to say 20% down payment and hopefully it's only a short duration. But if it is more permanent, then we have to really understand what's the reasoning behind JP Morgan and others. As private companies, they have right to make their own private business decision, but it would be very concerning to the real estate market, essentially wiping away the first-time buyers.
You there, Stephanie?
Yep, I think we have a few questions here. Did I miss any?
So Dr. Yoon, we had a question in the chat, and it came up about the bailout for the airline industry. Recently just came out about a $25 billion bailout. Any thoughts about that?
Not too much, other than, again, with people unable to fly, naturally, airline industry will be hard hit. And therefore, is it proper for government to help out an industry that is just absolutely hard hit, given the virus impact of it? One thing that I did miss out on telling you is that where is the government getting money for all these unemployment checks, small business loans, the $1,200 that people will be receiving in your electronic deposit, I think today? Where is the government giving this money? Pay the airline, maybe the cruise ship industry and so forth. It's largest ever budget deficit. How are they financing that? They're financing by selling it to the Federal Reserve. What is the Federal Reserve? Where does the Federal Reserve get the money to buy government debt? They're printing money. There's lots of massive printing of the money going on today. Any other country, printing of the money means higher inflation. Today, we don't have inflation. Most likely, we will not have any inflation in next year. But say 5 years from now, inflation could be a little higher than normal. Average is 2%, but the average 5 years from now could be 4% inflation, which means that some people who want to have a tangible asset like gold, gold prices may rise. But another good hedge against inflation is real estate. So real estate can be a very good hedge once the inflation begins to pop out. Now, mortgage rates will also be higher at that time, but people will be essentially buying real estate for the purpose of hedging against inflation.
So Dr. Yoon, we got another question about the JP Morgan Chase issue. And it's saying, kind of quoting you, playing a game of strong arm with the government to relieve the housing and mortgage lending industry. Do you believe other lenders will follow suit? Do you believe JP Morgan will backtrack on their stipulations? Is the government still buying, there's a follow-up to that, of buying $30 billion of mortgage-backed securities? When is their anticipated plan to release MBS back into the secondary market?
The lenders, mortgage brokers, others, they're originating the loan, knowing that there is a Wall Street investor willing to purchase that. because it has government backing. If the homeowners cannot pay, at least the government will pay the investors, and hence that's the liquidity portion. If there is not a Wall Street investors, the Federal Reserve will be purchasing, again, through printing of the money, but that is to provide the liquidity. In the case of JP Morgan, is a more unique issue of the mortgage forbearance. So as a mortgage servicer, they're just simply not getting that normal mortgage payment, and they're getting that cash crunch. And I think a part of this reason for JP Morgan is just trying to get the government, the Treasury, the Federal Reserve to say, look at us, this is a major issue. Mortgage forbearance is the reason why we are facing this issue, and mortgage forbearance is a government decision that federal government made. So I think they're trying to get that attention. I think there is some degree of some genuine concern that if home prices were to decline, any lender could face some issue. So non-government backed mortgages, jumbo loans, I think they will have some trouble in terms of a very high standard to get jumbo loans. And some people who don't normally meet the Fannie and Freddie criteria, those loans that is held by private banks, not sold off to investors or anything, just held in the bank, those mortgages could be very difficult to come by in the interim. So everything could change in a couple of months. Maybe JP Morgan will rescind its decision next week if the government say they will try to help out the mortgage servicer. I don't know, but I think what we have to really look at is what are the mortgage brokers doing, Quicken Loans and others, because the big banks are in essence trying to go out of this mortgage origination and also they are the big mortgage servicers.
So we have a question here about the impact of the shutdown here in the Commonwealth of Pennsylvania. Philadelphia borders right up onto New Jersey. So New Jersey is able to do home showings at this time. Do you see that somehow impacting the marketplace here in Pennsylvania, given that nearby states are able to conduct business to some degree, as opposed to us being in a pretty much a full shutdown state?
I think, in terms of the consumers, whatever neighborhood they had their minds on where to buy and so forth, does not change between New Jersey and Pennsylvania just because temporarily one governor decided on one decision versus the other. But in this couple of months, like April, May, you will see that New Jersey home sales declining far less compared to Pennsylvania. But this is just a temporary thing. And I don't think the consumers will be changing their decision regarding, okay, I'm going to buy a home in New Jersey right across the river because Pennsylvania is not permitting me to buy here. I don't think consumers are thinking that way. I mean, you talk to consumers all the time, so I think you would know more. But in terms of the data, Virginia, where I am, with social distancing, people can visit home, and home sales appears to be declining only moderately, and not the drastic decline that you are seeing in Pennsylvania. So
thank you for that answer. Going on to another question here. There's a whole lot here, so I'm just going to read it to you, Dr. Yun, and then you can reply as you see best fit. While the Fed may offer more liquidity to banks, my experience now says that all the liquidity in the world doesn't matter if the bank's requirement for credit score, income, down payment, etc., means less lending to home buyers. I've been told right now that even though the Fed rates are down, banks are raising rates due to credit risk. Additionally, loans that are not conventional are almost impossible as banks feel too much risk there. So what are the real mitigants to issues of banks' underwriting standards or pure volume of applications?
Just on the timing part, I have to drop off at 12:10. I'm actually at noon, but I'm just giving extra 10 minutes here. But I think we are in a very difficult economic circumstances. A very good question. Fed can provide all the liquidity, but trying to come up with that 20% down payment or 700 credit score, that will greatly impact home sales over the long term, even if the economy reopens. So if it is not truly mortgage servicing issue, I think it's mortgage servicing issue, and hopefully the Treasury or the Federal Reserve address that. But even for whatever reason, Federal Reserve or the Treasury, either for perception, they don't want to help out the banks because people will be very upset if they think that the government is helping out the banks. And then that 20% down payment is in place. Then, I mean, home sales is going to have a very difficult time because first-time buyers, the report that will be coming out tomorrow, 7% down payment on average, with many just meeting the bare minimum of 3.5% on FHA or 3% Fannie and Freddie back. So if that standard stays put, it's going to be quite harmful for the housing market to recover. But I think that decision, if it's purely private decision unrelated to mortgage servicing issue, again, mortgage forbearance, mortgage servicing issue, I think JP Morgan will be revisiting that credit standards, say 2 months from now, to see how the economy rebounds. Everyone knows second quarter is a wipeout. How does the economy recover in the third and fourth quarter? And based upon that, JP Morgan may begin to feel comfortable to say, oh, economy is coming back. Housing prices are not declining at all. Because one of the reasoning they gave for the higher credit standard is they believe the home prices will be declining measurably. So from JP Morgan.
Okay, Dr. Yoon, I think we've gone over on your time, so we'll free you up. Thank you very much for spending this time with us today. Stephanie, any closing remarks?
No, I just want to thank you so much for taking the time. I know you're extremely busy, and we really appreciate all your updates. Thank you.
Well, thank you for having me. Stay safe, everyone. I know it's a very difficult time, but economy and the housing market should be bouncing back in the second half. Thank you.
All right, thank you, Dr. Yoon. Folks, leave your thoughts in the comments. We'd like to see what your thoughts are, so send that privately to me. Thank you very much. Take care. Have a great day. We'll see you this afternoon with our next Zoom cast. Anything else, Stephanie?
No, I think that's it. Which
All
one?
right.
What time? Time and place?
3 o'clock.
3 o'clock. Update.
All right, take care, guys.
Okay, thanks.
Hi, Jake. It's Carrie.
Yo, what's up?
How are you?
I'm good. How are you?
Good. Good.
Where are you camping out?
I'm
You're down the shore?
I'm in the Jersey house. I go down the shore to look at a different wall every now and then.
Got it. Nice.
Yeah. Is this messing up your wedding? When's your wedding?
We delayed. It was June 6th,
That's what I
and
thought.
we pushed it to September 12th.
Oh, cool. Same venue, everything. You just moved it.
Everything sort of worked out the same. We're just pushing it back.
That's good. Good. Yeah.
Yeah.
How's biz been?
Good. I got one thing under contract since this all listed and under contract since this all started. I have some other stuff that is slower than I want, but
Yeah.
I had enough in the pipeline that I'm not freaking out yet.
Yeah.
What about you?